We are just minutes away from the closing bell on Wall Street. The sell-off accelerating into the close. Let's bring in Jared Blikre, who's here to take a closer look at what's moving. Jared.
I think the critical question for investors is this a one-off? In other words, did we have the conditions ripe for a sell-off already in place? Or is this Fitch decision a harbinger of more to come? In other words, is it a bigger catalyst for the markets than maybe is apparent today? Now, I think it's instructive to look at the losses we're looking at today. These are more than we've seen recently, but by no means are they catastrophic. Tech, communication services, and consumer discretionary, these are the three best performing sectors of the year. And those are also, not coincidentally, the mega cap sectors. And then you also have energy and industrials. Well, guess what the leading two sectors are over the last 2 months? Industrials and energy. And look what the top sectors are year to date. And that would be those three mega cap sectors that we were looking there. So it looks like we're simply giving back recent gains from some of the most profitable trades that we've seen this year. So taking profits, maybe that's one excuse. I don't necessarily like the term, but I want to look at the bond market because the conditions were already there in the bond market to suggest that we might see some weakness. Here's a 10-year T-note yield. It's up past 4% once again. We've seen it hit this level 3 other times going back to last October. Before that, you'd have to go back over a decade, I believe. But you take a look at what's happening now, bond volatility is also up. And that's something I've been warning about. Despite the low levels of equities volatility, the bond volatility is actually at fairly elevated levels. Here's a 3-year chart. You can see still in the middle of its range there, even though on a year-to-date basis, it is still down here. Now, if I put some candlesticks, you'll see there was a small uptick today in bond market volatility. That market closed at 3 p.m. Eastern. Also, finally, want to take a look at what's happening with the U.S. dollar index. That has been racing higher recently. This is another year-to-date look. Let me just put some candlesticks here, take the candlesticks off. I was talking to J.C. Peretz earlier today. He said the dollar index above 102, not going to see equities performing well. And here we have above 102. So it looks like the conditions were already in place to see a potential sell-off, and maybe Fitch was just a catalyst here.
All right, Jared Blikre, thanks so much for